Welcome to TalkTickers. Today we're diving into the key takeaways from a recent earnings call.
Sounds good. Lots to cover, as usual.
Absolutely. So let's start with the headline numbers. What immediately jumped out at you from the results?
Well, first quarter revenue looked pretty solid, came in at $179 million.
Okay, and that's up year over year.
Yeah, about 6% increase year over year, but maybe even more striking was the free cash flow.
Oh, yeah. What were they reporting there?
It exceeded $25 million. That's a big jump, like 40% year over year growth.
Wow, 40%. That really shows, a strong ability to generate actual cash.
Exactly. It's a good sign of underlying financial health, not just top-line growth.
Right. And it wasn't just about the money, was it? Their user base saw some significant movement, too.
It really did. Over 7 million new learners joined the platform just in Q1 2025.
7 million in one quarter.
Yep. Brings the total learner base now up to 175 million.
That's huge. That kind of scale, it's hard to ignore the reach they have.
It is. And they're feeding that base with more content, too. The course catalog is now almost 10,000 courses strong.
Nearly 10,000. And how does that compare to last year?
That's a pretty significant increase, about 37% up from the previous year. So lots more choice for learners.
Okay, here's a stat I found really interesting, the AI course enrollments. What do they say about that?
Ah, yes. That acceleration is, well, kind of staggering. They hit 12 enrollments per minute in AI courses this year.
12 per minute.
Per minute. Compare that to 8 per minute last year, 2024, and just 1 per minute back in 2023.
Goodness, that's like exponential growth. What does that signal to you?
It screams market demand, doesn't it? There's clearly a massive appetite for AI skills, and it suggests the platform is really tapping into that effectively.
Yeah, positioning themselves right in the middle of that trend. And what about the enterprise side? Still growing there?
Yep, steady growth. The number of paid enterprise customers climbed to 1,651.
Okay, and the growth rate?
That's a 12% increase year over year. So businesses, governments, campuses, they're still signing up.
Right, seeing the value for their people. Okay, so looking forward, what kind of guidance do they give for the full year?
They set the full year 2025 revenue guidance at $720 to $730 million.
Which translates to?
An anticipated growth rate of around 4% to 5%.
Okay, so a bit more moderate than the Q1 growth rate, but still positive.
Exactly. Solid start, but maybe tempering expectations for the rest of the year slightly.
All right, so that covers the main numbers. Let's dig a bit deeper now. Beyond the financials, what strategic directions did the leadership talk about? I know there's a new CEO.
That's right. Greg Hart, the new CEO, laid out his main priorities. Pretty standard stuff in some ways, but important. He's focusing on product innovation, expanding content, and improving their go-to-market strategies.
The classic 3 pillars, really. Execution is key, though.
Absolutely. How they actually do it matters.
Did he give any specifics on how they plan to tackle those areas?
He did touch on a few things. One interesting structural change is how they're reporting things. They've basically folded the degree segment into the consumer segment.
Oh, okay. So degrees aren't a separate reporting line anymore.
Apparently not. They're treating it more as just another offering for individual consumers. But interestingly, they still expect single-digit growth based on their non-DAP measures for both the combined consumer segment and the enterprise segment in 2025.
So simplifying things, maybe seeing degrees as part of that broader consumer learning journey.
Seems like it. It suggests a focus on the individual learner, whether they're taking a single course or pursuing a full degree online.
Makes sense. What about their global plans? Any moves to expand internationally?
Definitely. They've just launched over 100 courses that have been dubbed into other languages using AI.
AI dubbing. Which languages?
Spanish, French, German, and Brazilian Portuguese. This builds on their earlier AI text translations, which they said led to faster course completions.
That's fascinating. Using AI, not just for, say, course recommendations, but actually localizing the content itself at scale.
Exactly. It's about accessibility and potentially improving the learning experience across language barriers. Shows how AI is getting woven into the core operations.
Speaking of AI, tell us more about this Coursera Coach feature.
Yeah.
How's that developing?
Right. The coach. It started as more of a, learning assistant, but now it includes these personalized interactive bits they call coach dialogues.
Interactive dialogues.
Yeah.
Like you talk to the AI.
Sort of, yeah. More interactive learning experiences. They said the early signs are promising for boosting learner engagement, and it's generally available now.
You can see how that could make learning feel less passive, more responsive.
Potentially, yes. It's definitely pushing towards more personalized active learning online.
It also sounds like they're trying harder to connect the learning directly to careers.
Very much so. They launched a new career discovery tool back in Q4.
What does that do?
It basically maps their certificates and courses to specific job roles and the skills needed for them. They've got about 60 role descriptions covered so far.
And it includes practical info.
Yeah, localized salary and job data for around 40 countries. And they mentioned seeing some positive early effects on getting free learners to convert to paid ones.
So showing people the path. Learn this, potentially get this job, earn this much.
Precisely, making that connection much more explicit. It's a clear strategic push towards demonstrating tangible ROI for learners.
And underpinning all this is that content growth we mentioned, especially in AI.
It is. Nearly 700 AI-related courses now in the catalog. Huge demand there. Plus, they launched 5 new entry-level professional certificates just in Q1.
From big names, right?
Yeah. Partners like Adobe, DeepLearning.ai, IBM, Johns Hopkins Medicine, Microsoft. That brings their total professional certificates up to 90.
90 different certificates. And these are gaining traction outside the platform, too.
They are. They're increasingly getting credit recommendations from bodies like ACE in the US, ECTS in Europe, and SQF in India. These groups evaluate them for, quality and credit equivalency.
So formal recognition is growing.
It seems so. And they mentioned a forthcoming report, I think for 2025, on micro-credentials. It apparently says 85% of employers are more likely to hire candidates with these micro-credentials.
85%, that's a strong signal from employers.
It is. And it also said 94% of students want these credentials to actually count towards traditional degrees.
So learners and employers are both seeing value. That really highlights the potential shift towards these more focused qualifications.
Definitely. It's a major trend to watch in education and hiring.
Geographically, where are their main markets now?
Still heavily global. The US, India, Mexico, and Brazil were called out as key markets.
And the enterprise side keeps ticking along.
Yep. 1,651 paid customers, as we said. Businesses, governments, universities. And importantly, their net retention rate there is 91%.
91% net retention. That's pretty strong. Means existing clients are mostly sticking around and maybe spending more.
It suggests they're delivering ongoing value to those organizations, yeah.
And partnerships are still key, I assume.
Absolutely critical. They highlighted the ongoing work with Google, think AI Essentials, Agile Essentials courses, and Microsoft.
Microsoft's a big one for them, isn't it?
Yeah, over 35 professional certificates and specializations just with Microsoft, and those have seen over 1 million enrollments, apparently. So these big tech partnerships are huge for content and credibility.
So summing up their focus areas going forward, what are the main pushes?
It boils down to faster product development, expanding the content engine, using more agile methods and more Coursera-produced stuff, and just getting smarter about their go-to-market.
Which means?
Things like improving how learners find the right courses on the platform, discovery, and optimizing how they sell to enterprise clients.
Okay. Let's switch gears slightly to the financial nuts and bolts. How's the balance sheet looking?
Yeah.
Cash flow?
Pretty healthy, according to the CFO, Ken Hahn. He highlighted it was their strongest Q1 ever for cash performance.
We mentioned the $25 million free cash flow.
Right. And they have a strong balance sheet overall, about $748 million in unrestricted cash.
And debt.
No debt. So that gives them a lot of flexibility.
Flexibility to invest in those strategic areas we just talked about.
Exactly. Product, content, market strategies. Having that cash cushion helps.
And the outlook for Q2 and the full year financially.
For Q2 2025, they're guiding for revenue between $179 and $183 million.
Which is what, year-over-year growth?
About 5% to 7%. And adjusted EBITDA is expected between $11 and $15 million for the quarter.
Okay. And the full year profitability target?
They're aiming for a 7% adjusted EBITDA margin for the full year 2025. That's a 100 basis point improvement, so slightly better profitability.
Now, you mentioned they integrated the degree segment, but they expect degree revenue itself to decline slightly for the year. That seems a bit counterintuitive if they're integrating it.
Yeah, it's an interesting point. Degree revenue was $16 million in Q1, which is actually 5% growth, but they are forecasting a slight decline for the full year.
Why is that?
The explanation given was basically strategic focus. They're prioritizing what they see as bigger near-term growth opportunities within that broader consumer segment.
So maybe de-emphasizing pushing the full degrees for now in favor of certificates or other offerings.
That seems to be the implication, yes. focusing resources where they expect the quickest or largest returns in the current environment.
Got it. And that big jump in registered learners in Q1, what drove that? Was it marketing, platform improvements?
Sounds like a bit of both. They credited successful marketing campaigns, but also improvements they've made to the platform experience itself.
Any specific examples?
They did call out a significant uplift in subscriptions to Coursera Plus. That's their subscription bundle.
Right, the all-you-can-eat model. So that's gaining traction.
Apparently so.
Yeah.
Suggests their efforts to attract and retain learners are working, both through outreach and just making the product itself more compelling.
Looking ahead at content, where do they see the biggest expansion opportunities? Beyond AI, I mean.
They mention broadening into other subject areas, specifically calling out healthcare as one possibility.
Healthcare makes sense. Lots of professional development needs there.
For sure. And they plan to keep using both university and industry partners, but also significantly ramp up the amount of content they produce in-house.
Ah, Coursera produced content. Why do that?
Likely gives them more control over the content, maybe faster development cycles, and potentially better economics, better margins compared to revenue sharing.
Right, control and cost benefits.
Yeah.
Okay, one last thing on strategy. That career discovery solution. What's the longer-term plan there?
It's still early days, they stress that, but the plan is to expand the number of job roles it covers and integrate more third-party data.
To make it more comprehensive.
Exactly. The vision seems to be creating really detailed career pathways, helping learners see exactly how specific courses or credentials map to skills, jobs, and potential future career moves.
A full career navigation tool, essentially.
That seems to be the goal, yeah.
Okay, fascinating stuff. Let's pivot now to our favorite segment. This is not financial advice. Based on everything we've just discussed, let's throw out a wild, maybe plausible trade idea.
All right, let's brainstorm. Okay, here's one thought building on that AI theme that just kept coming up.
Go on.
You saw the AI enrollment numbers, 1 per minute to 12 per minute in 2 years, and they're actively using AI for dubbing courses.
Right, Spanish, French, German, Portuguese.
Exactly. So what if you looked at companies that specialize in AI-powered language translation and dubbing specifically for educational or technical content?
Ah, the enabling technology providers.
Precisely. The argument would be that as platforms like this one, and likely many others, lean heavily into AI for global scaling and localization, the demand for sophisticated, accurate AI dubbing and translation tech is just going to explode.
So a long position on those specialized AI language service providers.
Potentially. The outrageous but plausible part is just the sheer speed and scale at which AI seems poised to disrupt traditional human-based translation and dubbing, especially in education where consistency and volume are key. It could create a whole new market dynamic.
Interesting niche play on the AI education trend. Okay, got another one for us.
Yeah, maybe a paired trade this time. Think about those micro-credentials.
The ones 85% of employers supposedly prefer.
Exactly. And 94% of students want them to count towards degrees. So the idea would be go long on companies that are building the platforms for issuing, verifying, and maybe even integrating these micro-credentials with traditional education.
Okay, the infrastructure or service providers for micro-credentials.
Right, especially those partnering with universities. But then you pair that with a short position.
Shorting what?
Maybe target some of the traditional, perhaps for-profit education institutions that seem really slow to adapt to this, the ones still banking entirely on the old four-year degree model without seriously embracing or integrating these more flexible, skills-focused credentials.
So betting on the rise of micro-credential platforms and the potential struggle of incumbents who don't adapt.
Kind of. The outrageous bit is the idea that micro-credentials could genuinely start to eat into the dominance of traditional degrees for certain career paths, causing a real divergence in fortunes between the innovators and the laggards in the education space.
Betting on disruption, essentially. Fascinating. Okay, some
Yeah.
really thought-provoking ideas there. Definitely not financial advice.
Absolutely not financial advice, just connecting some dots.
Well, that wraps up our TalkTickers deep dive into this latest earnings call. We've hit the key financials, the strategic moves, and some really interesting trends, especially around AI and skills.
Indeed. The pace of change driven by AI and that intense focus on connecting learning directly to career outcomes, these are powerful forces shaping online learning, and you certainly see them reflected here.
We hope this breakdown gave you a clear and insightful view of what was shared. As always, please remember to do your own homework, your own thorough research before making any investment decisions.